Our show, Amazon Prime Day tomorrow. ETFs are all over that story. Let's talk with Simeon Hyman. He's ProShares, and Ed Rosenberg with American Century. Simeon, Amazon Prime Day tomorrow. You have two big retail ETFs that have been killing it this year. The ProShares Long Online Short Stores ETF, that's CLIX, clicks. The ETF there up 82% this year. Huge outperformance. It's long online and you're short brick and mortar. Do you feel that strategy is going to continue to work into 2021?
Yeah, indeed, Bob. Let me play like a lightning rod. I'll give you 4 reasons. Number one, if you look at Q2, takes people by surprise. The transition is earlier than you think. You have not missed it. Only 16% of retail sales were online in Q2. So 84 cents were spent in brick and mortar stores, and a lot of them were closed. Number two, the pandemic acceleration. That 16 was up from 11, but likely to be sticky. Think about a quadrupling of penetration in the laggard groceries, and also the stickiness of changes in share from folks like Chewy, which are 70% subscriptions. So those new customers are sticky. Or Etsy, which has so many more eyeballs after 15% of their sales came from masks. Number 3, fundamentals. You look at Walmart, which has become the number 2 online retailer, but over 10 years, their reward for that has been shrinking margins while Amazon's have doubled. So the fundamentals point towards the online folks. And finally, if you see acceleration and performance like that, you worry about valuation. Let me give you the following surprising note. If you look at the relative valuation of our online basket, the ProShares online retail basket, and you compare that to the tech sector, we're trading at half the price to book of 3 or 4 years ago. So at least on a relative basis, I know it's hard to do absolute valuation these days, not as expensive as you might think.
Okay, at American Century, you're one of many funds that launched an ESG ETF earlier this year. That's ESGA is the symbol. These funds are all raking in money this year, but there is increasing criticism. Last week or a week and a half ago, Burton Malkiel did an editorial in the Wall Street Journal saying ESG still doesn't have a coherent investment methodology. Is ESG in danger of faltering or suddenly suffering from a lot of backlash?
No, I mean, I think ESG, we're just in the first inning of it. If you look at ESG and compare it to something like value, there's a lot of different ways to go about going about value. There's a lot of ways to go about looking at ESG and defining it. You have traditional, which is exclusionary as a starting point. You have digging into the companies and finding out really where environmental, social, or governance is. And quite frankly, then there's impact. And there's a lot of different ways to look at ESG and think about how it would fit into your portfolio. I don't think it's dead at all. I think we're just in the beginning. I think overseas, there's been a lot of use of ESG long before the U.S., and the U.S. is really starting to pick up, specifically this year, as flows into ESG ETFs have been higher than they have in previous years, and it's only going to continue as we go forward.
Okay, gentlemen, thanks very much.